Welcome back to Market Day Report. All right, let's jump into the markets. By the way, we do have a big report coming out this afternoon. We'll talk more about that in a moment, though. Let's get into the corn market and how we were trading in the overnight session. You know, yesterday, corn finished the session in the red. So were soybeans. Soybeans were in the red, and we were higher across all three wheat exchanges. But in the overnight session, double-digit losses on the old crop, 480 on the March, down 10 1/4, 6 lower on the Ds. What about the beans? Well, beans off 9 1/4 on the March at 1034 3/4. Soy meal contracts were lower. We did see soy oil contracts move higher in the session as well. Now over to the wheat market. Let's start with July. 579 1/4 off 11 1/4. For hard red, July contract 593 1/4 down 14 1/4. And the spring wheat contracts, the December 653 1/4 off 9. Finally over to cotton. And at the end of that session, December down 30 at 68.58. Brian Hoops is with Midwest Market Solutions. And Brian, looking at the quotes there, anything jump out?
Well, a couple things, Tony. Good morning. No private export sale announcements this morning, so a little bit of a disappointment, I think. We started off the week strong with a couple sales and finished on a weak note. The corn open interest continues to grow. A lot of it is the algo trading funds continue to pile into the market on some strength and pushing the market higher up until the last couple days. Now, open interest has reached over 2 million contracts in corn, and that's the first time since 1996. So I'm surprised it took that long to get back to that level, but it's a huge amount of open interest there for corn. Now, of course, we're going into the weekend here, and tariffs are one thing that's on top of traders' minds. Tariffs against Canada, against Mexico, both at 25% levels, and then also concerns about tariffs against China. As we get into the month of February, South American harvest is going to really pick up an aggressive pace, especially in northern Brazil, and work their way south. Brazil has over 8 million metric tons of soybean commitments to ship during the month of February. That's a new record for them. There's going to be a lot of product hitting the market here in the next several weeks, and I think you're starting to see soybean futures reflect that. We took out some support overnight, closing below it, and our next target is about the 1018, 1019 area. So we've made new lows for the week here for soybeans. Technically, it looks a little bearish from a fundamental standpoint. It's a little bearish as well, because when that South American supplies hits the market, it means a slowdown for U.S. exports, and very possibly we'll start to see some cancellations of previous purchases.
Yeah, and I've been going back and looking at some of the tariffs and the discussion we had during the first Trump administration, and really what jumped out were some of the retaliatory tariffs. So I would imagine if we levy these 25% tariffs at some point, we could see retaliatory tariffs, which in that case could have some pressure on our commodities here. So let's take a break. We'll come back in a moment, pick the discussion up, and move to livestock. Market Day Report continues in a moment. All right, cash cattle will be probably one of the topics of discussion today when we talk about livestock markets, but we also have a report coming out. We'll talk more about that in just a moment with Brian Hoops. First off, how did we finish off the session yesterday? Well, live cattle futures were lower, down 255 front month February, 204.47. April, 345 lower at 201.50. So let me see. I'm just counting here. I believe that's 2 consecutive days of lower closes for live and feeder cattle. Front month at 273.20, down 207 on the feeders. The April 272.32. Hogs, however, shaking it off and moving higher. So maybe, well, I know I've been wrong. I've said hogs were riding the coattail. Doesn't appear as though that's such. 84.37 on the Fed, up 47. Brian Hoops, Midwest Market Solutions. I think there are really 2 stories, maybe 3 going here. The pork, is it really riding the coattails? We also have cash cattle, and then we have a report. How do you put all that together?
Yeah, let's talk about those things. Especially in the cattle market, that's where people are really interested in what's happening, it seems. Now, as we look at this cattle market, a couple of weeks ago when we really started off the rally, we noted that it was because the cash markets were premium to where the futures were. So the futures had to play a little bit of catch up. And that's what we saw here. We saw a huge rally. In fact, by the time we peaked out early part of this week or even late last week, the futures were premium over the cash. Now, because we had cash market move higher yesterday, we saw some 208 in the Southern Plains really catching up to where the Northern trade was at 210 earlier this week. That 208 trade, and you look at where February futures are, we're once again discount in the futures to the cash. Usually that's a bullish sign. You look at the feeder cattle market, January went off the board this week, so March is the lead contract. Eventually it has to line up with that feeder cattle index. That index is all the way up around 281. And the futures are at 273. Again, big discount to that index. So at some point, they have to meet and converge like the January contract did. But that discount that the futures holding to the cash is usually a very positive sign. Now, the caveat here is packer margins are really imploding. They're deeply in the red. $171 this morning in the red. That's a negative, and something has to give here. We can't continue to trade cash moving higher and the cutouts moving lower. So most likely Packers are going to start shrinking their kills, probably a small weekend kill this week. Next week, probably another small type of kill, trying to get the box beef to at least stabilize and move higher. And then maybe they won't have to pay up for the cash markets. But we know demand has been good for the cattle. We know supplies are not increasing. Weights were actually down last week. They're still heavier than a year ago, but they were down 8 pounds on the week. So all that still remains a positive fundamental for the market here. And then you have the cattle, or that cattle inventory this afternoon looks to be friendly as well. So snuck a peek at the bid ask. It looks like we're going to open a little bit firmer. The question is, do we have that profit taking one more day, or have we done enough and we start to move higher, trying to align with that cash markets again for next week?
All I know, Brian, is come Monday morning, it could be interesting. So come back and join us Monday morning. Brian Hoops, Midwest Market Solutions.